Good morning, everyone. Today, our group will present a due diligence analysis of Viglasera Tianson Joint Stock Company, or VIT. The objective of this analysis is to evaluate whether VIT represents an attractive acquisition target by examining the company from 6 perspectives: commercial, financial, legal, operational, risk, and valuation due diligence. Rather than focusing only on strengths, we apply critical thinking to identify hidden risks, challenge assumptions, and determine whether the acquisition creates long-term shareholder value. Now, let's begin with the executive summary. VIT is a leading ceramic tile manufacturer in Vietnam and a member of the Viglasera Group. The company is implementing modernization programs aimed at increasing production efficiency, improving product quality, and reducing operating costs. Our analysis indicates that automation and process optimization can improve capacity utilization and support future profitability. However, while the company shows strong growth potential, several financial and operational risks were identified during the due diligence process, which must be considered before any acquisition decision. From a commercial perspective, VIT operates in Vietnam's ceramic tile industry, which benefits from urbanization, infrastructure development, and increasing construction demand. The company possesses several competitive advantages. First, it benefits from the well-established Viglasera brand, which has strong recognition in the construction materials market. Second, VIT maintains an extensive distribution network and exports products to multiple international markets. Third, the company continuously develops new products to adapt to changing customer preferences. However, competition remains intense. Numerous domestic and foreign manufacturers compete on price, product quality, and innovation. Therefore, while industry fundamentals remain attractive, maintaining competitiveness will require continuous investment and product differentiation. Financial due diligence revealed both strengths and concerns. On the positive side, revenue increased to approximately VND 2.3 trillion in FY 2025, while net profit improved to around VND 73.5 billion. Profitability indicators also showed improvement compared to previous years. However, several critical red flags emerged. The first is customer concentration risk. More than 95% of revenue comes from a related party distributor. This creates significant dependency and limits commercial independence. The second issue is liquidity risk. The current ratio is only 0.96 and the quick ratio is 0.29, indicating limited short-term financial flexibility. The third concern is inventory risk. Inventory provisions nearly tripled, suggesting growing levels of slow-moving stock. From a critical thinking perspective, although financial performance appears positive, the underlying financial structure remains vulnerable. Legal due diligence. Legal due diligence identified no major legal disputes or significant compliance violations. The company maintains recognized certifications, including ISO 9001 and ISO 14001, demonstrating commitment to quality management and environmental standards. Corporate governance practices appear stable, supported by regular shareholder meetings and transparent reporting. Therefore, legal risk is assessed as relatively low compared with other due diligence areas. 6. Operational due diligence. Operationally, VIT demonstrates strong manufacturing capability. Production utilization rates are estimated at approximately 80 to 90%, indicating efficient use of assets. The company follows a structured production process supported by strict quality control procedures. Management also continues investing in modernization and automation projects to improve efficiency and reduce waste. Nevertheless, energy costs remain a significant operational challenge because they represent a large proportion of total production expenses. Overall, operational capability is assessed as strong. 7. Risk assessment. After evaluating all due diligence findings, 4 key risks were identified. First, customer concentration risk due to heavy reliance on a related party distributor. Second, liquidity risk caused by weak short-term financial ratios and dependence on debt refinancing. Third, inventory risk resulting from slow-moving stock and potential write-downs. Fourth, Energy cost risk, because ceramic manufacturing is highly energy intensive. Using critical thinking, we conclude that these risks are interconnected. For example, if market demand declines, inventory levels may increase, liquidity may deteriorate, and profitability may fall simultaneously. Therefore, these risks should not be evaluated individually but as part of a broader risk system. 8. Final acquisition decision. Based on our due diligence findings, VIT receives an overall acquisition attractiveness score of 7.4 out of 10. The company possesses strong strategic assets, including a recognized brand, manufacturing expertise, and favorable long-term industry prospects. Valuation analysis suggests a fair acquisition range between VND 5 and 6.3 trillion. However, the acquisition should not proceed unconditionally. Our recommendation is acquire with conditions. Specifically, the buyer should independently verify inventory quality, address customer concentration issues, assess liquidity requirements, and ensure that the acquisition price reflects identified risks. If these conditions are satisfied, VIT has the potential to create sustainable long-term shareholder value. To conclude, Viglasera Tianzon is fundamentally an attractive acquisition target with strong commercial and operational foundations. However, successful acquisition depends on recognizing and managing key risks rather than focusing solely on growth opportunities. This demonstrates the importance of critical thinking in business decisions, evaluating evidence objectively, questioning assumptions, and balancing opportunities against risks before making investment decisions. Thank you for listening.